But what more of what my question was what should they be thinking about? What should be in the back of their heads? Um, let's say they've already decided, hey, I really want to buy. I
Hmm.
don't want to rent. But what are some things they need to think about and put together and really be prepared to come in and get their best shot at purchasing a home?
First and foremost is credit. Make sure you're making all of your payments on time. Keep your credit card balances low. You don't want to max things out. Um, because those the payment history and high credit balances are going to be your biggest dings, so to say, in your credit factors. And then also, a lot of people think that, oh, I have to have 20% down, or that there are so many different loan programs that allow for a lot of different options. You do not have to have a small fortune to be able to get into a house.
Okay, and like I guess with that being said, what would you say? Like maybe do like some short elevator, short pitches. Like what are the different like loan programs available to people out there that people may not be thinking of, and like what kind of things do they provide that are advantages or disadvantages?
Well, the typical one that is conventional, and that's the one that people assume that you have to have 20% down for. You don't. There are different lenders that will go down to as little as 3% down.
Hmm.
On a conventional, there is, mortgage insurance if you don't put the full 20% down, which adds a little bit to your monthly payment. And that gets higher or lower depending on your credit score per month.
Hmm.
Better your credit, better your debt to income factor, the lower mortgage insurance is going to be. There's FHA, which requires a 3.5% down payment. You can obviously put more, but that's the minimum.
What's the benefit to an FHA though over a conventional, and then what's the flip side of that, like the cons to that as opposed to conventional?
FHA to conventional, biggest differences is FHA typically allows for a lower credit score,
Mm.
as well as higher debt to income is typically allowed, and that's because it is FHA, so it's a government backed program, so the banks can recoup some of the funds if somebody were to default, so it's why it's allowed to be a little bit higher.
Okay, so that's the pro.
That's the pro. Um, the con is the mortgage insurance that I talked about on the conventional is there for life, for the life of the loan. It doesn't ever go away. With conventional, once you get it paid down to 20% or to 80%, if you didn't put that initial 20% down,
Mm-hmm.
it goes away.
Gotcha.
So your payments go down. With FHA, it's there for the life of the loan. So until you sell that house or you refinance out of the FHA, it's going to be there.
Okay.
Um, the other thing is typically with the property itself, FHA is a little bit stricter with what it will allow.
Gotcha. Like, what are a couple big things?
Um, I mean, conventional doesn't really like to see stripping, like stripped exposed wood. But FHA, you have to make sure that, there's no exposed wood. And they typically do, the appraiser like inspects things a little bit closer. Um, conventional is just more of a head and shoulders type of a quick looky loo, like up in the head crawl
Mm-hmm.
space or whatever. FHA is a little bit more strict. Um, like a piece of carpet, like a chunk of carpet missing on a conventional might not be a big deal, but FHA might say that's a tripping hazard and has to be repaired.
Gotcha. What are some of the other ones then? Like, there's a lot of loan programs. It seems like.
There are. I'm just gonna go over the main ones though
Mm-hmm.
because those are these are the cores.
Mm-hmm.
Um, because a lot of lenders have specific to them programs. Um, the other big one is VA,
Mm-hmm.
and obviously that's for veterans. There's the federal VA, which is the one when people say VA loan, that's what they're referring to. But like Oregon has the Oregon Department of Veterans Affairs, and you can get state benefits
Interesting.
to buy a home as well. But that's basically a conventional loan at that point. You still have to have a down payment, the
Mm-hmm. And
state
then,
option.
so what are the benefits to a VA loan?
So the federal VA is 0% down.
Mm-hmm.
That's the biggest one. You don't have to bring in a down payment.
Mm.
So there's a potential to have no funds out of pocket
Mm-hmm.
because you can negotiate for the seller to pay for your closing costs and prepaids. Also, the rates usually, not always, but the rate can be a little bit more lower compared to conventional. And the biggest thing is the debt to income ratio goes the highest out of all loan programs.
So would you say that like the DTI issue, because I feel like that plagues a lot of home buyers
in this day and age? Yes.
Would you almost go as far as to say that that probably is the biggest advantage to a VA loan is the DTI?
As a mass majority, maybe, but for a lot of people, that down payment's huge. Like, they can afford the monthly payment, but they just don't have any expendable cash to put down.
Gotcha.
I think that's a 50-50 in what I see with my borrowers.
Gotcha.
Half of them are debt to income ratios. The other half, they don't have the money. So it's really not a definitive thing. But that's why the VA fits both of those. But obviously, you have to be a veteran that has enough points to receive that.
So FHA, VA, and conventional, are those the
There is
main
also
ones?
USDA.
USDA, like beef, so you can get a loan on a cow.
No.
Oh, shit.
USDA, it's also 100% financing. However, they are super strict with their debt to income ratios. You have to fit in a very, very nice, pretty little box. And I have not personally seen very many people be able to qualify for those. There's also income restrictions. You can't make more than a certain amount for those. And those are also only in rural areas. There can't be over a certain amount of population.
Gotcha. And isn't FHA for first time?
No. That is a common misconception. Thank you for bringing that up.
Right, because I always thought FH was first time home buyer.
For Federal Housing Administration.
Just kidding.
FHA. Federal Housing Administration.
Gotcha.
It's not for first time home buyers, but it is only for primary residences. Same as a VA and USDA. You can only use it for your primary home. You can't use it for a second home or for an investment property.
Wow. Okay. So that's interesting. So Federal
Housing Administration.
Administration, and then the United States Department of Agriculture, which is weird that they're involved in a home loan program.
It's for rural areas.
Oh, okay. So like people with probably farmhouses too.
Whatever. But just smaller communities, not big cities.
Gotcha. So we're looking at the USDA, FHA, VA, and conventional.
Mm-hmm.
And really the biggest points to that is just like whatever your situation is, like income wise, and obviously if you're not rural, you're not going to worry about it. But and like you were saying, it's hard for people to qualify for USDA because of all the restrictions.
Mm-hmm.
And which one of those programs? Well, let's just get rid of USDA.
Yeah, it's a great program if you qualify.
Which one of those programs, as far as FHA, VA, and conventional, currently with the market, I'm assuming you're kind of, especially in this area, you're saying like it does seem to be picking up.
Mm-hmm.
Which one of those three seem to be the ones that are picking up the most?
It's equal. It's just the market overall, and we, at least my company, we don't just assume you're going one way.
Right.
We make sure you're getting into the best loan program that fits that specific borrower's needs.
Gotcha.
So it's pretty equal. Especially that one other thing with FHA, they do have county loan limits. So they have a max loan limit that's well below the conventional conforming limit.
What do you mean by limit?
Loan limit, the max amount that you can get a loan for.
Gotcha. So you're not talking about like amount of loans in that area.
No, the actual limit to the loan amount.
Gotcha.
So FHA is a smaller loan amount, so that's one thing. In a lot of areas that we lend in, the FHA loan amount is well below the median median house price. So it doesn't work even if that loan program would be a great option for that person. It's too high of a loan amount.
Gotcha. And I'm assuming, and this is just me assuming, with the rates the way they are, you're not seeing an influx of refis.
Not a ton. We have a handful
Mhm.
because once again, people are understanding that this is what it is. But it's more of a needs-based refi. They have other things they have, why they need to do it, why they need the money, or consolidating debt. That's still a great option. I mean, people, interest rates are at whatever they are right now. That's so scary. But what are your interest rates on your credit cards? What is the interest rate on your car loan? So if you can pull out that equity, pay off those other things, your mortgage payment might go up, but overall, the debt consolidation option, your overall out what you're paying every month out towards bills is still going down. So I mean, it still can be a benefit.
This is a very interesting thing because I would, surfacely you think, okay, well, rates are up. You definitely don't want to refi. But I guess like if your net costs
Yeah.
overall in your life could go down because of it.
Mm-hmm.
And that's a very interesting thing. And this, I know that it's weird because like the mortgage industry really, really intrigues me just because it's such an interesting balance in my opinion of like, okay, well, bad things are happening, but like you said, everybody still needs to live somewhere.
Mm-hmm.
And I feel like when a lot of these, I guess, and I say bad as far as like just with inflation and stuff that's happening, the rental market is just in shambles anyway.
Yeah.
So regardless, you're looking at like your best option, even as bad as it is to buy.
Mm-hmm.
Um,
And you got to think long term.
Right.
That might suck right now, but long term, went like in 07, 08 when things got horrible, the market crashed. Yeah, it sucked, but for the people that held on, they came out so much better on the other side. They had tons of equity. They weren't throwing away anything to paying other people's payments. And so you just got to think of that too. Yeah, it might suck right now, but as long as I can buckle down and do it, you're going to put yourself in you're building wealth.
Yeah, but you're kind of talking about people who already had it, and then
That's what I'm saying, to do it now, because it sucks now, but if you can still get in a few years, you're going to be in such a better position because you chose to do it now rather than wait. Every month that you're making a mortgage payment is a month that you are giving yourself equity, that you're paying yourself essentially for the future. You're building that wealth.